Hey everyone, welcome back to the channel. Today wanted to revisit Coinbase. So we did a valuation on them last April after they IPO'd, and I think it's a pretty interesting company, and I think with the way crypto performed in 2021, it would be a good time to retake a look at Coinbase and see what kind of valuation we get. So what I've done here first, quickly, I've copied over their income statement and DNA, stock-based comp, PP&E, some things like that. They only have financials through 9 months. So I've used a very simple formula to get a full year. And this is just using the 9 months of 2020 divided by total 2020 to get that proportion. And then applying that proportion to 2021 gets us the full year estimate. So you can see we have revenue growing about 8 times year over year. Gross margin, very similar, trend about 8 times growth there. Net income is up almost 13 times, and that's primarily actually a big piece of that is there's a provision for income taxes. It looks like they had a big loss or something that they've been able to apply, or a big write-off, something of that nature is what it looks like through 9 months. So that's the little bit of the improved multiple. It's not from any improvements anywhere else really. So in my April model, I talked through a lot of my model and how I build it out down here. And really what we're doing is we're calculating the average fee per volume of transactions, basically. So we take like the retail volume. So if we look at that, we have like retail transaction revenue. So if we take 2021, the 7.6 billion, and if you divide that by their total transaction volume of 637 billion, then it looks like they're charging about a 1.19% fee for every dollar of volume transacted on the platform. And that's kind of the basis for our model. Feel free to download this, look through the formulas. It's a little complicated to follow. But something I think to note here to deconvolute is the revenue of Coinbase is very much proportionally tied to the directional increase in cryptocurrency markets. So what I mean by that is if we look at Bitcoin, for example, it's gone from 7,400 to 47,000. And these are rough numbers as of the end of the year for each of these years. So it's gone up, 7 times roughly. So about 700% Bitcoin prices has gone up. And honestly, their revenue has also gone up about 8 times. So, 7 times of that 8 times growth is pretty much tied to an increase in Bitcoin price. And the reason it works that way is because they charge a percentage as kind of their transaction fee. So if a price of a Bitcoin goes up 7x, well, their percentage fee stays the same, but the absolute dollar amount goes up. And let me quickly walk you through this, and then I'll kind of talk through the end results here. So I calculate the total amount of Bitcoins traded. So if we take their total retail volume and divide it by the price of a Bitcoin at the end of the year, obviously this is a very simplistic view, but it gets to the concept that I'm trying to highlight here. They go from about 10 billion of Bitcoins worth of value traded to about 13.5. So, right, that's pretty sizable, 37% growth in transactions on the platform. Now, obviously the transaction volume tells a different story. The transaction volume is going from, where do we have it? 73 billion to 637 billion, so about 9x higher, while the number of transactions is only growing about 37%. But because the price is appreciated so much, it increases astronomically. So then we're going to calculate the revenue generated per one Bitcoin traded. Basically, the idea here is you take that price of 7411 or 47,000, depending on the year, and you multiply it by their transaction fee. And that's going to give you the dollar amount that they get per Bitcoin traded. From here, we can look at, we can actually deconvolute this 105 and this 565 into 2 parts. We can do it as if there was no price appreciation, more or less, and then this other aspect here, which is how much of the revenue is generated purely just from the price of Bitcoin increasing. So to do this, right, we're going to take the original price of Bitcoin and the new price of Bitcoin, subtract those two, so you get about 40,000. And 40,000 times the 1.19% is going to give you $477. So, right, they're getting an additional $477 roughly for every Bitcoin traded, purely just from the price appreciation. And this kind of goes on like a rolling basis. So here you'll see it's 47.5, and you'll see the price neutral is 58.10, and that's based off the price of Bitcoin being 4,076. So here you'll see 88.50. That's based off the Bitcoin being 74.11. So it's kind of this rolling basis. Anyways, in aggregate, you can kind of see the split here, and we'll see of the 7.6 billion revenue that we're estimating for this year, 6.5 almost comes from just the appreciation of Bitcoin. This is just a high level concept to show how much they actually truly benefit from, an incremental price increase in cryptocurrency, because they're charging a percentage as a fee and not a flat fee like a $9.99 commission. So as the crypto markets increase, so does their revenue proportionally. So here's our DCF. I have it all linked up. Feel free to download and look at this. I think the important and interesting thing here is I threw together this this data table over here. We're assuming a 3% terminal value in all of these numbers, but what we have here is Bitcoin CAGR. So this is showing kind of how much you expect Bitcoin to change in value every year, and then the WACC, and then from here you can see the Bitcoin price, what the Bitcoin price would end at in a decade from now, and you can kind of pick where you are along the spectrum, which I think is interesting. So if you think Bitcoin isn't doing much, you think there's no risk at all, and you think it's just going to stay at about 47,000 a coin, we're saying Coinbase is worth about $48 billion in a decade from now. That's not bad, right? If you think, Bitcoin's going to go up 10%, but you think there's some risk of that, you want to sign a 10% risk, and you think Bitcoin will be a little over $100,000 a coin in a decade from now, then Coinbase is probably, fairly valued right now around 60 billion. And you can kind of see the spectrum here. So if you think Bitcoin is completely useless and going back to zero, well, there's still a value for Coinbase, and it's going to be probably somewhere between 5 to 7 billion. If you're crazy and you think Bitcoin's going to a million, if you're crazy into crypto is what I meant to say there, and you truly believe in it, going to a million, 2 million, then Coinbase is going to be significantly undervalued if they can keep the same business model where they're charging a percentage as the transaction fee. So I think it's a pretty interesting table. I think it highlights kind of just how much uncertainty I would say there is. And you could feel free to come in here and actually change these numbers. So if you're like, I think it's going to go 2.5%, 5%, 7.5%, right? If you think there's some other kind of more appropriate numbers, feel free to come in here, download this, and you can just edit actually these Bitcoin CAGR numbers. And that will actually impact the valuation. You can see what you get. Personally, my take is I think Bitcoin is a pretty risky thing. I think it could go up. I think it could go down. I have no clue. We've seen it go as high as like 65,000 already. So in a decade from now, will it be back there? Maybe. Will it be back at $100 a coin? Maybe. I have no idea. So I think if you pick a conservative 0% Bitcoin appreciation, you say it's just going to stay kind of steady at this price, and you assign kind of a relatively healthy risk to that, 13%, 10%, 11%, low double digits right here, I think you get somewhere about a $20 to $30 billion valuation. That seems reasonable to me. Still seems a little, I don't know. Cryptocurrency price just fluctuates so much, it's hard to say. Right? I could see Bitcoin going up to $150,000 this year. Like the way we went this year from 4,000 up to 60,000 is just like crazy. It just happens like overnight, it feels like. So for it to triple again, is that really that crazy to think of? Maybe, maybe not. So I don't know, but I think this table is great, and it really highlights how you can kind of play with what you think the price of Bitcoin is going to do. And based off how you kind of feel it's going to go, right, you can see the valuation of Coinbase and how that flows through. So I think there's a lot of risk in Coinbase. I think it's a fascinating company. I think that's great that they've tied their business model to being a percentage fee and not a $9.99 transaction fee like an E-Trade. So I think it's I think they're moving into new markets as well with like NFTs and staking and all these other things. So I think it's definitely a company here to stay. I think the question is, can they get less of their revenue to be so reliant on kind of the price of Bitcoin? Because since it is that percentage base, if Bitcoin does well, they do well. If Bitcoin does bad, they do bad. They're directionally tied there. So anyways, I hope you found this interesting. If you have any questions or comments, feel free to leave them below, and I'll get back to you. Thanks so much.